thank you for having me at the 8th Annual Insurance Summit of the Economic Times, the next wave of growth. Today, I provide a global perspective of some of the issues that are impacting insurance, and particularly for issues around merger and acquisitions. This, frankly, is a very exciting time for the insurance market. It's a time that we expect to be of continued growth and a clearly continued need across the markets. Following COVID, we expect a significant increase in insurance sales in the market, and we're excited about the future. I just want to touch on 4 trends that the conference, I know, is discussing, but it is actually important for our industry. The first is clearly the acceleration of digitization in the marketplace itself. We've seen dramatic changes, and let's cut it between the enhancing current business models and creating new business models. In enhancing current business models, we've seen digitization of agency forces, the ability not only to have agents interact with their customers on a digital basis, but also the agency sales model, the agency model, business model itself, where digitization is used for recruitment, activization, onboarding, and continued management of the agency force itself. We've seen how digitization is impacting our bank assurance models, where banks are deploying for lead generation and for sales processing, where digitization is impacting ecosystem development. And we've seen obviously a rise in direct to customer digitization, which still suffers in most markets from a significant cost of acquisition, but is growing in its penetration rates in the marketplace itself. And of course, we've seen digitization use data analytics, IA, in terms of making appropriate offers to customers and to manage claims and to manage fraud as part of that process. So the whole role of digitization is changing the very nature of our business over time. Insurance has been a laggard here, but is quickly catching up in deploying digitization across its various distribution and service models. And we'll see that continue to accelerate, both enhancing the current business models and, of course, creating new business models in market. In India, of course, we've seen some very interesting deals as a result of the new business models in this place. So ground cover, Policy Bazaar, Paytm, we've just seen our friends at Swiss Re make a significant investment there, and ACO with Amazon, all have demonstrated the investor interest in this whole new trend of digitization, an exciting aspect for our future business. The second trend I want to touch on is enriching the customer engagement. And really, this is about rethinking insurance and pushing it to be about prevention as opposed to just straight protection. And thinking about our customer engagement in a way that encourages a lifetime partnership with the customer. And I think this, you'll see controversially, this continue to evolve into premium determinations, increasingly moving from community pooling numbers to individual risk assessment. And we might also see that sort of deploy out into the effective use of DNA for underwriting, or some components at least for underwriting. So this could be very much a change as we interact with customers on a deeper level with biometrics, with location, with activity tracking, engaging with customers on a regular basis, and helping them prevent an insurance event as opposed to just being protected in an insurance event. The biggest area we've seen in this area, obviously, in customer engagement has been in the health space, where we've seen telemedicine, the third-party pharmaceutical, health advice, activity monitoring, health and wellness advice come to the fore as a real point of engagement. And we've got a number of our competitors in this space offering very interesting products that are improving the lifestyles of their engaged customers. So enabling customer engagement becomes a key theme. Integrating ESG, as we've seen with Glasgow in the last few weeks, this is a big impact on insurance, both in the investments that insurance companies are making, as well as the coverage that insurance companies make in terms of risks that they're taking on. This will be sustainable business transformation becomes the key theme as insurance companies change the way they think about what they invest in and what risk coverage they are prepared to offer. And it's full, this involves significant engagement around governance, around remuneration, around integrated reporting, around control functions to bring in line the ESG themes for the insurance company. For us at Generalli, it clearly impacts the way we think about coverage for coal. We're committed to a zero coverage. We're committed to not underwriting oil and gas, reducing our thermal coal risk exposure, and it impacts also our carbon footprint and the reduction in travel and office space. All these issues impacting insurance in the ESG space, and it's accelerating at a fast pace as we've seen from the Glasgow conference. Well, let's touch on drivers of merger and acquisitions. And we've seen a number of key thematics arise here, both through issues around regulatory issues and around strategic footprints, strategic decisions about which footprints to have, and of course the rise of insurtech. On the regulatory issues, I think India is a classic example where the recent change in the FDI caps has led to increasing M&A activity in the Indian marketplace. And it's not only the FDI caps that are impacting the market, it's also the caps on domestic investors such as banks, where banks have been restricted into their future holdings or their proposed holdings into insurance companies. Some of these regulatory issues have created some dilemma, as we've seen in a lot of markets in the region which has FDI caps. Issues such as if you want a joint venture as a foreigner with a local bank, you can go to 74, the local bank is now at 20 and 20%, and there's a gap. And how do you fund that gap with a domestic investor? So there's certainly challenges, but we are seeing increasing activity particularly in the Indian M&A space for insurance. We're also seeing a re-rating of the China market. We've seen the share price in the China insurance companies significantly go down in the course of this year, where we've seen 30 to 40% drops in market caps on the listed entities. That also, with China's restating the previous year on FDI to 100% on the life space, also giving opportunities for new activity, M&A activity in that marketplace. So the regulatory issues and ownership issues are key. We're also seeing it in terms of solvency and net worth requirements, which is impacting the market. Where in certain markets, take the Philippines for example, there's a significant increase in the net worth requirement that will probably mean that a number of players will drop from the market as a result of those increased capital issues. So that will also impact the whole activity in market. And obviously we're seeing increases in distribution opportunities where standalone distribution broker agency businesses at scale, typically with digital, are being brought into the marketplace. COVID has had an impact. We've seen both in India and a number of other countries, Indonesia, Philippines in particular, where the excess mortalities have impacted the capital requirements of the insurance companies and will need to be resolved with further capital injection. I guess the most exciting area we've seen is around insurtech, and that will continue to drive M&A activity. We've seen a significant amount of fundraising in that marketplace. So from a global perspective, insurance continues to be a very exciting place to be. It's quickly and it's moving very, very fast in terms of its move to digitization now, and provides a great opportunity for both traditional players as well as new entrants into the insurance market. Thank you very much.